welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. It's a wipeout Wednesday on D Street as heavyweights like HDFC Bank and Reliance drag down indices. 2.3 lakh crore rupees wiped out as Sensex and Nifty fall more than 1%. All sectors in the red. HDFC Bank plunges nearly 4% as first financial report of the merged entity highlights several concerns. Investors also spooked by a stock downgrade by Nomura and Kotak Institutional Equities. Ola Electric to drive into D Street, set to hit the capital markets. Reports say the Bhavesh Agarwal-owned company will file the prospectus to raise $700 million by October end. Policymakers face a tough challenge as crude oil hits a 10-month high. Business Today TV speaks to experts and tells you what its economic and political impact is likely to be. Business Today TV looks at the impact the diplomatic standoff between India and Canada could have on trade. Will the more than 5 lakh Indian students studying in Canada also suffer? Mark Zuckerberg reveals his big plans to monetize WhatsApp, allows use of other payment methods, launches verified services for businesses, and a new way for businesses to engage with customers on the messaging platform. The possibility of trade talks between India and Canada restarting anytime soon is looking bleak. Top government officials had confirmed to Business Today TV last week that trade concern had been overtaken by political differences between the countries. BTTV looks at what the impact of the latest diplomatic kerfuffle could be on business relations.
Prime Minister Narendra Modi played the perfect host, but the chill in the Indo-Canada ties could not be hidden by the warmth of Indian hospitality. Canada had, after all, just a couple of months ago, fired the first shot by calling off talks on a free trade agreement talks with India. And earlier Tuesday, India woke up to the news of the Canadian Prime Minister alleging role of Indian authorities in the killing of a Khalistani separatist in Canada. This was followed by a tit-for-tat expulsions of high-ranking diplomats. Most, however, agree that the diplomatic standoff is unlikely to affect trade relations between the two countries much. Canada is not even among the top 25 trade partners of India. Even Bangladesh is higher on the list. However, for Canada, India was the 10th largest trading partner in 2022. Bilateral trade between India and Canada jumped to $8.16 billion in 2022-23 after a couple of years of COVID-induced slowdown. India's exports of $4.1 billion to Canada comprised mainly pharmaceuticals, gems and jewelry, textiles and machinery, while imports included pulses, timber, pulp and paper and mining products. What analysts are concerned about is the huge investments Canadian pension funds have made in India. Many feel that continued tensions between the two countries could hurt these investments. The largest pension fund of them all is the Canada Pension Plan Investment Board, which had investments of $15 billion as on 31st March this year. This includes a 2.7% stake in Kotak Mahindra Bank. It also owns shares in around 70 other publicly traded companies in India. Another big fund is the Quebec Workers' Pension Fund, which has about $6 billion invested in India. The Ontario Teachers' Pension Fund has about $2.2 billion invested in Indian funds and securities. Most of these investments are in areas like infrastructure, renewable energy, technology and financial services. Moreover, cumulative FDI from Canada since 2000 is about $4.07 billion. Over 600 Canadian companies have a presence in India, and over 1,000 companies are actively pursuing business in the Indian market. Importantly is the massive presence of Indian students in Canada, which may ensure normalcy in bilateral relations. In 2021, there were 319,000 Indian students in various Canadian colleges, contributing $4.9 billion to the country's economy. 226,000 more joined them last year. Indian students are the largest student group in Canada, accounting for 20% of all international students. There are also over 200 educational partnerships between Indian and Canadian institutions. Analysts also cite the cold relations between India and China. Skirmishes and standoffs at the LAC have failed to dilute trade relations between the two countries. Many, in fact, feel that trade and commerce could be the catalyst for a future revival in Indo-Canadian political relations. Bureau Report, Business Today Television.
Markets crashing today. Benchmarks dragged lower by heavyweights like HDFC Bank, Reliance Industries, ICICI Bank. Traders also booking profits ahead of tonight's outcome of the US Fed meeting on interest rates. The sell-off began early in trade but gained momentum in the latter half of the day, resulting in nearly 2.3 trillion rupees being wiped out in investor wealth. The Sensex was down 800 points today, settling at 66,800, and the Nifty was down 232 points at about 19,900. Few gainers on the list: Power Grid, Coal India, ONGC, Asian Paints, Sun Pharma holding out there, but the major laggards today: HDFC Bank, JSW Steel, Reliance, BPCL and Ultratech Cement. Cuts were deep across the board. HDFC Bank clearly one of those today that was responsible for the knock in the stock markets. The counter had a gap-down opening and fell more than 3.5%. The fall coming after the bank released financials of the merged entity for the first time, with a number of negative indicators. There has been a rise in bad debts, a fall in net interest margins, a fall in net worth, and operating ratios also are higher. Traders and investors were also spooked by a stock downgrade by Nomura and Kotak Institutional Equities.
Nomura has downgraded the stock. The target price has been slashed to 1,800. They fear four negative surprises from the recent con call. A sharp uptick in NPAs in the corporate loan book. They've highlighted higher cost to income due to accounting changes, NIM cuts or 25 basis points, net worth adjustments as well. Your thoughts on HDFC Bank currently, and what would your suggestion to investors be who've been waited with patience for a long time for this stock to now move?
So if you had patience with either HDFC Limited when it was there, or HDFC Bank, or HDFC AMC, or HDFC Life, I don't think you would have got disappointed, Sakshi. And it is a track record. And I love it when some foreigners come out with these kind of reports. It gives us an opportunity to, because, there is always a knee-jerk reaction in the market of such reports. So you get an opportunity to invest into these stocks at a decent valuation, because naturally, because of such reports, you will have pressure on the stock on that particular day or a following day. But let me just say this name, HDFC Bank, would have definitely found place in almost all chief investment officers, mutual fund large cap list. I don't think you will see HDFC Bank missing out from any of those things. Secondly, with the post-merger, there was a lot of expectation in the market. This will happen, that will happen. But, synergies take time to play out. So you need to give it time. We maintain our positive stance, and I think 1950 to 1980, that is 1,950 to 1,980. That is our target on HDFC Bank, and we remain optimistic about our view. And I think if you do get an opportunity because of this report of some softness or otherwise in the market, then please look at opportunities like this to invest in HDFC Bank from a long-term point of view.
Million, for you, what would be a good buying range for HDFC Bank?
See, currently we are seeing that HDFC Bank has started trading well below the 200-day moving average line with this gap down opening. But yes, it has got a good support at around, multiple support at around 1,500 levels. So if you get a chance to enter near, say, another 20-30 rupees lower, then it is an extraordinary good level to buy. I don't expect that 1,500 would be taken off. From there, you could see a good rebound towards, say, 1,600 levels. So one can keep a stop loss of 1,500 and play for the higher side. But if one has to enter here, another 20-30 points you can look lower.
A big week for IPOs. Here's a look at what happened in the primary market today. RR Cable made a decent listing with gains of 14%. The issue, priced at 1,035 rupees, opened at 1,180 rupees and rose to its high of 1,213 rupees. This was the first IPO to be listed on the new T+2 timeline. That's just 3 days from the close of the issue. The company raised 1,964 crore rupees from the IPO and will use the money to repay a part of its debt and for expansion plans. The Yatra online IPO was subscribed 161% as it closed today with a price bank of 135 to 142 rupees per share. The travel services company is raising 775 crore rupees. Anchor investors had already invested about 350 crore ahead of the IPO. Yatra, the company, intends to use the net proceeds to fund strategic investments and acquisitions. Sai Silk IPO open today has been subscribed just 7%. The price bank for the IPO is 210 to 222 rupees per share, with the total fresh issuance worth 600 crore rupees. A similar amount is being offered under the OFS category. Crude oil prices could create some serious problems for policymakers in the coming days. Though prices dipped today, they're still at their 10-month high after hitting those levels on Tuesday. Both Saudi Arabia and Russia have announced production cuts, and OPEC has warned that demand will be much higher than supplies by the end of the year. Brent hit a high of $94.34 a barrel before moderating by around 60 cents in trade today. High prices could pose a challenge to the government ahead of assembly polls in the next few months. Prices have not been changed for the past 15 months, despite crude touching a low of $72 in the summer. Business Today TV managing editor Siddharth Zarabi spoke to a panel of experts on the rising prices and their impact. Listen in.
The current trend that we are seeing, and while there are certain experts who say that, well, it may not touch $100 to the barrel or more in the near future, there are others who say that that is going to be something that is inevitable. What's your own view about crude oil prices at this point of time, sir?
It is extremely difficult to estimate what the price is going to be, or forecast is anyway, largely because it is not something that is determined largely by market forces. It is determined by monopolist producers, and how they would behave, what would be their concerns will be, is difficult to predict. Though I do feel that it cannot go too far beyond 100, simply because in a slightly longer term perspective, the higher the price goes, the faster the penetration of electric vehicles would be into the systems, and the demand for oil will come down. So from a long-term point of view, they will lose money, but maybe in a short term, they might gain some gains. So I think they need to balance this. My guess is it will go up a little bit. The government should perhaps moderate inflation, but not completely, and do it partly.
Look at it from January to September and cancel out everything else. It is a good increase, almost above 15-16%. Mr. Taneja, how serious is this as a concern for the Indian economy?
Well, when crude oil prices go up, it's always a concern for big importers and, energy deficit economies like ours. But looking at your chart and looking at the reality, I mean, the recent rise in crude oil prices have actually nothing to do with either economic fundamentals or demand and supply fundamentals, which always play the most important role. I don't actually see even major geopolitical trigger, which again always play a very important role in terms of which direction the prices are likely to go. So there is no demand supply issue, there is no geopolitical issue, but still the prices are going up. The question is that why? And the reason is simple, is that major producers like Saudi Arabia and Kuwait and Iraq, together with Russia and other friends, the so-called OPEC plus, they have decided that oil prices should go up. And they say, mainly Saudi Arabia, they say they want higher oil prices because they need more money. They are building infrastructure. They are going for, massive, modernization of economy, etc. So therefore, they need more money. and Russia for other reasons, but Iraq and Kuwait, they have got similar reasons. Now, so what they have decided, they're using the instrument called, cutting production. So they're cutting production, creating anxiety in the market, a lot of tension in the market, and market is extremely sensitive to what, for instance, big producers like Saudi Arabia or Russia or Kuwait and Iraq, they do. And here, markets kind of senses that they want the prices up, and therefore the prices are going up. Now, this is a situation which has created a big problem, big challenge for economies like ours and also economies like China and, in fact, the global economy. And even for developed economies like the United States, whenever the oil prices are high, economies even like the US, faces major challenge, or economies like ours even more, because our dependence on crude oil is very, very, very high. And at the same time, the fact of the matter is ours is still an oil economy, despite massive investments in solar and renewables and other sources of energy. But the fact remains we are still an oil economy.
WhatsApp has said it will support credit card payments and services from rival digital payment providers in India. Addressing the Meta Conversations event in Mumbai, CEO Mark Zuckerberg announced a big e-commerce push using the ubiquitous app and revealed various measures for businesses.
Now, as you know, we've launched our own payment solution in Brazil and Singapore. And today, I am excited to announce that we are bringing this service to India. With payments in India, we're going to support other payment methods as well, including all UPI apps. This is going to make it even easier for people to pay Indian businesses within a WhatsApp chat using whatever method they prefer. I'm excited to announce some new features that I think will be game-changing for businesses and really useful for people. The first is something that we call WhatsApp Flows. This gives businesses the ability to create customized experiences right within chat threads. So, for example, a bank can build a way for customers to book an appointment to open a new account. A food delivery service can build a way to place any order from any of their partner restaurants. Or an airline can build a way to check in for a flight and pick up a seat, all without having to leave the chat thread.
The newly launched Akasa Air is in crisis and claims that it might have to shut down. The airline has told the Delhi High Court all of this following the resignations of 43 pilots. The sudden resignation has forced the carrier to cancel 24 flights per day in September. The airline has said the pilots did not serve the mandatory notice period of 6 months to a year, which forced the cancellations. And they've reportedly joined Akasa's rival airlines. Akasa currently operates 120 flights a day. It expects to cancel 600 to 700 flights this month alone. Let's go across to Karishma Sadani for more on this. Karishma, clearly they're not going to let this rest. They've taken it to court, but operationally, how are they going to overcome this huge challenge?
Well, right, big turbulent times for the Indian aviation sector. In fact, it's now with the newcomer Akasa Air, which has actually been doing quite well with its expansion plans, but looks like the pilot shortage and pilot resignations have impacted the sentiments and emotions behind their operational strategy. In fact, officially they have also conveyed this, that though they are working on a strategic plan, the fact that competitive airlines are also hiring makes it difficult. But however, they have a fleet of around 30 aircrafts currently with enough pilots that will take over the operations. They've requested the DGCA and filed a plea at the Delhi High Court in order to allow a mandatory notice period of 6 months to 1 year for co-pilots and also the pilots, in order to retain them and not let them, of course, leave the operations. We're also picking up from sources that there has definitely been an internal letter that the management has written to the employees, guaranteeing them that they stay afloat despite these turbulent and tough, difficult times that the airline is going through. And especially the fact that they've received their international operator certificate definitely is a point of encouragement for them to get back in the game very soon.
Thanks, Karishma. Big relief in store for all investors and residents of Lavasa Smart City, with the Bombay High Court ruling that the city no longer requires renewal of its 2011 environmental clearance. Spread over 20,000 acres, Lavasa is the first privately developed city located in the Mulshi Valley of the Sahyadri ranges of the Western Ghats. It's now managed by the Darwin Platform group of companies.
For an ambitious development stuck in a legal quagmire for the past 12 years, the Bombay High Court ruling comes as a big relief. A recent order on Darwin Platform group of companies, Lavasa Smart City, ruled that renewal of environmental clearance would not be required if it has been obtained before by the companies. Lavasa Smart City got the clearance from Union Ministry of Environment and Forest in 2011. According to the company, the decision clears the path for the resurrection of India's pioneering Smart City initiative, a vision that is now set to be realized under the stewardship of Darwin Platform Infrastructure. The company added that the judgment clarified that once environmental clearance is obtained, it does not need to be renewed, alleviating a major pain point for the Lavasa Smart City project. In a precedent-setting decision, the Bombay High Court has categorically decreed that the environmental clearance for construction projects need not undergo the arduous process of renewal or revalidation at a later stage. Darwin Platform has sought approvals from the Union Ministry of Environment and Forest to erect the world's tallest statue of India's Prime Minister and net zero retail, holiday homes, entertainment, institutions and hospitality at Lavasa Smart City. Ajay Harinath Singh, the chairman of Darwin Platforms, has further announced that 500 acres in Lavasa will be used for 3 defence airports, one each for Army, Navy and Air Force defence enclaves with training and sports facilities. The promoters is also all set to construct 1,500 3-bedroom houses for IPS officers, an equal number for IAS officers and an additional 1,500 for IRS officers. Bureau Report, Business Today Television.
And that's all from us on the show tonight. Thanks so much for watching.